Hey everybody, it's Jim Hiles at First Capital Gold Plan 101. Today is Terrible Tax Tuesday. It's also a Terrible Market Tuesday. We'll talk about the market in another episode, and we've had a lot of volatility lately. So there's some tax planning to be done. That called tax loss harvesting you should be looking at in the portfolio. At least we do, but that's not what we're talking about today. We're talking about just some basic things going on in taxes. Just to remind you as you get going through the year, you've got some changes that are happening for 2022. So far, no tax law change, and we don't think this is going to happen. Midterm elections probably will have a lot to do with that. So hopefully, hold your breath, cross your fingers. We won't get hit with what they were talking about, a year or so ago. In the meantime, we've got the standard deduction going up. We have the deferral going up into retirement plans. That also includes a deferral for those over age 50. Maximum contributions to any retirement plan went up as well, 61,000. HSAs, again, all this is inflation adjusted up. Gifts, $16,000 per person. So be aware of that one. We like making gifts right now because of the next one here. The estate tax exemption, the amount you can actually pass without an estate tax is over $12 million per person. Husband and wife together, $24 million. That's going to change, so be careful about that. And I'm going to show you how in just a minute. But if you have the opportunity to take advantage of an HSA or any of these retirement funds, then notice that you'll want to increase or adjust upward your allocations to them to take advantage of what the 2022 increases are. You want to think about making gifts. And if you do annual exclusion gifts at $16,000, it doesn't have to be cash, it can be stock. It can actually be pieces of real estate, businesses, things like that. You can also gift to 529 plans, and you can even accelerate the gift in the 529 plan by 5 times that number. You can one-time, 5-time deposit into a 529 plan. Now, let's talk about the estate real quick. 2025 is called a sunset. I used to like watching sunsets with a cold cocktail, but this sunset's not going to be so good. Basically, what happens is the law reverts back to what it was 10 years ago, essentially, or what will be almost 10 years ago, meaning $5 million is what they're saying right now, down from $12 million. So a significant decrease is going to happen. It's going to sunset unless they decide to put a new tax law in to continue it. And right now that's going to be, kind of depends on who's in power and control at the time, but it's going to be cut in half is what we're thinking. So be aware that there are all kinds of discussions going on still. We are still looking at the SALT deduction limit, whether or not that's going to change, hopefully increase, but it's a political game right now in terms of how that might come around. So, but keep your fingers crossed. It might happen. Who knows? We'll find out shortly enough. Stay tuned. That's enough taxes for one day.